Good afternoon, everybody, and welcome to Friday's edition of your Daily Market Insight video. Yes, we have the big show, and yes, we have Carnage in the 21 over 21 list. We're going to get to that later in the video. And yes, I am filling in for Don today. He had some stuff come up, so I'm stepping in, taking over the big show, the 21 over 21. So let's get right into it, right? It's December 3rd, a Friday, 5 minutes after market close. Let's talk about what just happened. Market bounces but reverses, finishes near the lows. So we actually saw the last like 10 minutes of trading, and this happens a decent bit on pretty ugly days. We saw the market close pretty strong given the way the market had traded pretty much the whole day. So really, you see the performance here. Q's down 1.75, S&P down 0.9. That's really not reflective of what it was 10, 15, 20 minutes before the close, right? The Q's were down 2.5, S&P was down 1.5. So it actually looks better from a standpoint of the daily performance than really it felt for the majority of the day. So that being said, G5 down over 3%, S&P down about 1, Q's down roughly 2, Dow pretty much flat today. Don's talked about that a good bit, that the Dow tends to outperform in periods where there's a flight to safety or fear is rising, like now. Mid caps down a little over 1%, Russell down a little over 2%. So like I said, initially we tried to move upwards on the Qs and the S&P in particular. That got harshly rejected at that overhead resistance. We're going to look at those key levels here in just a second too. So correction, or market state remains in correction. There is no change from yesterday's video. Same with the trend. No changes from what I went over yesterday. We put market leaders in short term from neutral to down. If the S&P ends up breaking that 50-day moving average with conviction, if the Qs get below that 50-day, we'll see changes start to show up more in the medium and even potentially the long term if the selling continues. So no changes today, however, to the trend gauge or to market state. So before I get to this, the actual charts, this is the team at Revere. I know I always say it, but if you have any questions about the video, anything I cover, send me an email, hunter@revereasset.com. If you're interested in what we do, what our strategy is, how we manage risk, whatever the case may be, please send either me an email or anybody here, Dan, Tim, Merrill, Alex, or Don at revereasset.com. So let's get right into it. First, we're going to start with the S&P. Actually, the Qs is what I have up here in the background. And so you can see it actually looks like the Qs more or less bounced off the 50. Well, don't be so sure of that, even though that is what the candle looks like today. We undercut that 50-day moving average, actually went $1 or $2 below it. So now today's lows are important once again. Rejected here at the overhead 21 and declining 8-day. You can see that right there. That's the pink line slicing through the green line. And now something I want you to keep in mind here on the Qs and the S&P, the 100-day simple moving average is only a little bit below here at about like 376, 377, roughly in that area. So keep that in mind. It's just an area to watch on the Qs here. So the important level, however, for the Qs, particularly to the downside, is 380. You can see that is just, this is the previous pivot, that 380 level / today's low of 378.90. That's what you want to watch, in my opinion. To the upside, you just want to see some closes above the 21 and the 8. But right now, the action is not very indicative of upside type of price behavior to follow. I mean, today was pretty harsh rejections, reversals on a lot of names and the indices. So the area I'm really focusing on here on the Qs is 380. On the S&P or SPY, it's 450 or 4,500 on the SPX, right? So we have now tested this 3 times. Today we actually pierced it. We cracked through it, right? We went through 450 on SPY. Once again, we had a strong close. I'll show you what I mean here. This is a 1 minute of the S&P, right? We were down right down here before this, almost 1% rally roughly from 450 to 454 almost in the last 10 minutes there of trading. So the S&P ends up finishing right on the 50-day, but it did break back below it. So you didn't get 2 consecutive closes above the 50-day. That's important. Rejected at these overhead moving averages, just like the Qs. And now this 450 level becomes imperative, as well as today's lows. So that's what you want to watch on the S&P, in my opinion, where we've tested it. We've been dancing all around it. Personally, I would look for a harsh break one way or the other. Could be to the upside, could be to the downside. But the evidence right now is obviously pointing to a downtrend. So quickly here, IWM getting no love, still looks like garbage for lack of a better term. Rejected at this declining 8. I've talked about the fact that that 8-day can be a really good measure, especially on a daily chart, of the shorter term trend. And you can see right now, ever since this day here where we closed below the 8 and have not been able to get back above it, the 8-day exponential is operating as resistance and a short-term downtrend line too. So just something to watch here. I know I've talked about it on IWM, MDY, even the Qs and the S&P. I am looking for closes back above the 8-day exponential moving average to signal that maybe at least a short-term bottom is in. And then secondly, I want to see closes at the top of the range, and I want to see the 8-day exponential average start to go upwards as opposed to downwards. Same situation here with MDY. Rejected at the overhead 8, really was below the 200-day up until the last 10 minutes, closed right on it to slightly above it, kind of like the S&P did with the 50. And then DIA, the most mild of the bunch today, similarly rejected at the overhead 8-day, sitting right here slightly above the 200-day. I will say you can see how this starts to look like a little bit of a pennant here, right? Lower lows or higher lows, excuse me, starting to look like a little bit of a pennant. That is not necessarily the greatest thing to see after a sell-off right here on the 200-day average, with all the moving averages up over top starting to cross over and move down. So DIA right on the 200 for the time being. And then lastly, TLT, the flight to safety, maybe best metric you can look at, actually completing the breakout today. So TLT breaking out. Certainly there is some fear rising in the market. Indices starting to break down. Stocks have already been breaking down. And as you're going to see when we get into the 21 over 21 right now, plenty of stocks coming, even the last of the leaders starting to falter. So very quickly, before we get into that, I'll go ahead and start with NVIDIA because it was on the 21 over 21 list and it is coming off. Well, I say that like the S&P up until the last 10 minutes, it was below, it gets back above. So I guess NVIDIA technically gets to stay on here. So NVIDIA gets a pass, it does get to stay on, but I will say we trimmed a little bit of this today. It was one of our last remaining positions in Grow as it sliced through the 21 for the first time, obviously in a long time, as you can see here. We took a little bit more off of this today. So took a little bit more off in NVIDIA. We did get back into the S&P hedge today. Don will speak more about that in his videos next week. And just to highlight kind of the action we saw today, utilities and consumer staples, the two strongest sectors today. And then conversely, banks, KRE, and technology, XLK, the two weakest sectors today. So just further evidence that there's a flight out of risk on names and flight into safety names, right, via TLT, XLU, XLP. And then we had one lone gap up on a brutal day. Marvell held up okay, has pretty nice volume today. So MRVL having a gap up wouldn't be the most trusting of gap ups in this environment. So with that being said, let's get right into the 21 over 21. So QCOM here, although it has been moving down since this date here in the middle of November, it is still above the 21. One of the best looking remaining semiconductor stocks. It really hasn't had extreme volatility like we've seen some of the other names have. So QCOM holding up well for the most part. The line in the sand is clear, right? This 170 area, you could call it 167 to 170. If it can't stay above that, that's cause for concern. But for the time being, QCOM holding up. Unity was on last week, and I should say as we go through this, we don't have replacements as there was such turnover, really about 80% of the actual list itself coming off, right? So we're going to have to really rebuild and reset. And to that point, there's also not a ton of stocks out there that are even above the 21-day exponential moving average. I track a list of about 1,400 stocks on a daily basis, and we have now moved to about 10% or less that are above the 21-day, and a lot of those are not even necessarily liquid enough for our concerns. So lots of stocks below the moving averages. Like I said, around 90% below the 21 EMA in the 1,400 stock universe I track. So Unity coming off. PSTG, I put right there with Qualcomm as one of the ones that's attractive, that's held up really well. PSTG stays on. Remember the key level here, I talked about this one in a video, maybe Monday or maybe it was yesterday, I'm not 100% sure. As long as this stays above 29.50, above 30, I like the way this looks. It's a big weekly breakout here on PSTG, holding up really well. ZIM also stays by the skin of its teeth, staying above the 21-day moving average, not by much. One of those that actually still looks pretty good. We'll see if it continues to hold up or if it ends up beginning to break down as well. But for the time being, ZIM staying above the 21. BLDR, another name that's going to stay above the 21. We talked about it on the podcast today, so listen if you'd like to hear some more information. Well, we talked about the fact that home builders and this, Home Depot, BLDR, DHI, TOL, those names have held up really well and even shown RS over the last couple of weeks. Is that something that's going to continue? Are they going to be one of the leading groups moving forward, or are they ultimately going to falter if the market continues to struggle as well? So something to watch. But BLDR for the time being stays on the list. Lulu coming off, harsh break of the 21 right here on Wednesday, and then today rejected at the declining 21 back down here to the 50. We saw that on a lot of stocks. We saw that on the indices today. QQQ and SPY had similar candles to what you see here. So a lot of stocks are going to look that way, right? John Deere also going to be coming off. It's not very far below the 21, but it is below. It's below the 200-day. This isn't the greatest looking chart at the current juncture. So DE coming off the list as well. DVN, an oil company, one of the strongest, but you can see the 21 starting to roll over, closing below it today. This name is coming off. I would say keep this one on your radar. It's been one of the strongest and best acting oils during this recent run. Maybe it ends up holding up the best, as it has held up better than some of its peers. But DVN coming off the 21 over 21 for the time being. AMD, unlike NVIDIA, was not able to get all the way back up to the 21 into the close. It did end up finishing about 3 or 4 points higher than it was at like 3:30 Eastern. Once again, I think it went from about 141 to 144. But below the 21-day, AMD, not quite the level of leadership that you see out of NVIDIA, but below the 21-day, coming off the list nonetheless. Couple more here. We're going to keep rolling through them. Etsy, brutal action here from 315 all the way to 220 today, really, in a matter of like 5 or 6 days. So Etsy just absolutely crushed. You can see here just brutal action, slicing through the moving averages like butter, as you can see there. A few more here. Let's keep rolling through them. Tesla, big name, was one of the best acting and best looking, no longer looks that way today, down 7%, harsh break of the 21 after trying to reclaim it yesterday. Now that 1,000 area, that $1 trillion market cap area, and the 50-day moving average all converge to form an interesting level of support there, right around 1,000 for Tesla, something to watch. TTD coming off, similar to Etsy, just brutal last couple of days, from 115 to 90 in a short period of time, really from 110 to 90 in like 3 days. So TTD off the list, brutal break of the 21, not able to get back above. Zscaler, talk about a harsh candle. Check this one out from a few days ago. 373 to 314, that's the range on the day. Nasty break of the 21, rejected today kind of at that overhead declining moving average area, and then all the way back down to 300, sliced through the 50. So Zscaler, no bueno. Nucor fighting for its life right there on the 21, but I'm going to go ahead and say this one's coming off the list. We had 3 closes below. Even today we closed slightly below. So Nucor coming off as well. Enphase also coming off, just harsh selling here. 276 all the way to 215 today. Nasty break of the 21. I mean, just really brutal action in a lot of names. SI also coming off, down 15% today, rejected at the overhead 21, just like the indices. SBNY, I mentioned banks, one of the weakest areas today, down 5%. That's not a really great looking chart or setup, in my opinion, at the moment. So SBNY, not a great candle today. Last couple here, net, well off the list, brutal action, 220 to 160 in just a short period of time. Nasty sell-off. Datadog, from challenging 200 to testing 150, below the 50-day, below the 21, off the list. And the very last one here, Roblox, actually gets to stay. However, we did pierce the 21 today for the first time. This is one of the leading stocks, which so is Unity, but that's broken down. So Don't like that it got rejected kind of at the overhead 8-day, and don't like that it sliced through the 21. So I'd be careful with Roblox moving forward. But that wraps up the 21 over 21. I know there was a lot coming off, but it is what it is. The market is pretty tough right now, and until we start seeing some changes of character, right, some closes above the 8-day, some buyers coming in, some big time volume to the upside, we're going to maintain our position as being very defensive and out of the way. So I hope you all have a great weekend, everybody. Thank you for listening to my edition of The Big Show, and I will see you all in Monday's video. Thanks, everyone.